Investor purchases in the U.S. fell by 46% year over year in the fourth quarter of 2022, according to a new report from our friends at Redfin. The last time investor purchases dropped so significantly was 2008 during the subprime mortgage crisis. Investor sales dropped 45.1% back then. So this latest report from Redfin, is it a red flag? Is the market crashing? Have investors fled? In this video, I'm going to talk about it. I'm going to show you some stats. Might open your eyes a little bit. Stay tuned. All right, Matt, the Mortgage Guy, residential mortgage broker licensed across this beautiful country. Go to greatmortgagebroker.com if you want to connect with me and my team. If you want to connect with a great agent, go to homeandmoney.com/Matt. I don't know where I want to start. First and foremost, I respect Redfin because they have a lot of data. And so I source and cite their stuff quite a bit because in a lot of cases, data don't lie. But in this case, data can be a little bit misleading, right? And I'll tell you exactly why. Let's see what they say when they say that investor demand and purchases has fallen off a cliff, 46% less year over year. Well, I understand about demand waning because it's the same for owner-occupied properties as it is for investors. I work with plenty of both, right? And when you can get a 3% even on a single family investment property in August of 21. I know so because I did that. A lot of investments look attractive, right? When rates go up to 6% or even higher for the investment property stuff, those investments don't look as attractive. And so investors aren't going to be as aggressive and buying as much. This is a graph of home purchases made by investors January 2019 to September of 21. Now, I went ahead and unclicked the non-investors line, so you won't even see that one. Just want to show you monthly home purchases made by investors. And as you can see, back here in 2019, 50,000, 60,000, 70, some months up to 80,000 purchases a month made by investors. And this line is pretty flat up until we get into 2021, where investors saw that the money was pretty cheap, in my opinion, and went out there and started buying up more and more properties in most cases because the debt is an asset. If you can get 30-year 3 to 4% money against an asset that's going to appreciate, an asset that pays you, rent, it's pretty attractive, right? And I personally know a ton of investors that were looking to get as much of that cheap debt as possible. So no wonder that summer of 21 into Q3 and Q4, 130, 140,000 a month of what they consider here investor purchase, right? And so if you take these numbers up here, 130, 140,000, and you say they decrease by 46%, okay, so they went back to normal, right? I know investors are still buying properties. I know investors who are actively offering every single day. They're just not buying as many because the numbers don't make sense. And either the seller is unrealistic because, their neighbor sold a similar fourplex back in March for 550,000. They think they should be able to sell those for $6 million. When the debt is more expensive, someone who's doing the numbers and doing their due diligence is going to tell you, no, I can only pay $470 for that and still have it penciled. So that is, in my opinion, the real story, right? Is that one, going back to a normal amount of purchases from investors, and two, we saw like an unnatural spike, just like we saw 7 million transactions in real estate. As much as this comes off kind of alarmist and it's this huge drop, the biggest drop we've seen since 2008, it's not really much more than going back to where it normally was. Investors pumping the brakes because the numbers don't work, not buying as much because the numbers don't work. I see just as many investors out there actively looking to invest, but it's all numbers to them. It's not emotional. And sometimes it's not need based like it is when you're buying an owner occupied property. There's many times when you're moving from California to Texas, you're moving from this part of the state to the other part, you're moving from this neighborhood to that, going from 2 bedrooms to 4 bedrooms, whatever the case may be, where you need to move your family and your primary residence. And in that case, you're less price sensitive, you're less rate sensitive. Investors are going to be more sensitive to both, especially those who have a portfolio and only are going to buy deals that make sense. That's probably the moral of this whole story is, as an investor, I'm an investor myself, when rates go up and the cost of capital is more expensive, just crunch your numbers with the new rate. Will that mean that instead of getting 4 offers accepted this year, you get 1? Probably. Will numbers decrease on how many homes investors buy? Yes, because 1 instead of 4, not as many deals make sense. So that's my spiel. That's my 2 cents. That's what I have to say about that. Redfin went on in this article to talk about investors fleeing, some of these pandemic boom towns like Vegas and Phoenix, and they're running for the hills. Investor home purchases fell in Las Vegas by 67%. I get it. I get that those markets are softening. I get that we might see, 15, 20, 25% from the peak pullback on home prices, but it's not a crash. It's a pullback. Too much steroid injection, too much low interest rate influx of demand and upward pressure on prices. Some of that's coming back to reality, just like investor purchases coming back to reality. So comments, concerns, questions, leave them down below. More than happy to answer them. Hopefully this was helpful. Redfin, I love you. But this one was a little bit fuddish. I don't know. Maybe that wasn't the intention. I guess you are just stating the facts and the numbers. But when we go versus numbers from 2021 that were super inflated, of course we're seeing it. And I guess it's easier to click on, right? Oh my gosh, a 46% decrease, the biggest decrease since 2008. That's how you get people to click. Anyhow, if you want to watch other mortgage videos on my channel, click here, 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 and here.